Well, tough question, putting me on the spot on the precipice. The one you referred to is Parcel, excellent company. They went through the Lloyd's lab, based out of the US actually. Yeah, so they've got a way of measuring the temperatures that vaccines are transported at, and COVID, a lot of the early COVID vaccines had to be kept very low temperatures, and it's a very simple parametric product, complicated to build like a lot of these things, but if it goes below a certain temperature, then basically a payment is made on that trigger. To your question, I mean, what we're seeing is that parametric is most suited where there is no traditional conventional alternative insurance, and the market is either pricing it really high because it doesn't understand it, or you simply can't get it. And so therefore you've already narrowed down the area. I think the one thing that we're going to see a lot more, and this is a sort of COVID effect as well, is in non-damaged business interruption. So clearly a lot of the losses that were suffered from COVID were loss of revenue for lots of reasons, but it's quite difficult to actually pin that to a specific act. Traditionally business interruption would happen from some kind of damage or very explicit lost revenue. With things like some of the payments going through organizations like a MasterCard or a Visa, it's now possible to track what those actual payments were at the aggregate level, and therefore you could build a trigger on that basis. So that's where we're going to see it. But you're right, there's probably 2 or 3 companies that scale offering sort of SME, small business type parametric that are successful. I call out Descartes and New Paradigm Underwriting, who are doing that mostly in the natural peril area. It is going to keep growing. There's a lot of early companies coming through, and it's relatively, I wouldn't want to say easy, but there's a lot of data out there that's free or almost free. That means getting the data that forms the basis for the trigger is relatively straightforward. So back to Robin's point that we'll probably talk a bit more about, it's really then ultimately, can somebody building those kind of triggers find the capacity to back them on the one hand, and then can they find the distribution, i.e. can they find brokers who are willing to understand it and sell it to their customers? And that's really ultimately what's going to define whether these are successful or not, is do the brokers get behind it, and are they willing and able to sell it to their customers?
I'd make a little add just like to that. Funnily enough, outside of more sort of cat-related parametric, in other words, the capacity, the insurers are really keen on parametric insurance. It's a nice diversification play. They see it as an adjunct to what they do. So the capacity as a whole has not been a problem. Distribution, really good data sources, but the brokers, I don't feel, have been yet convinced. So getting out in what amounts to a B2B2C play, I don't think anyone's cracked distribution at scale yet. And it's not because of the quality of the offerings. The offerings are really, really good in most cases.
I'm Matthew Grant.
I'm Robin Merttens, and we're InsTech London.
And this is The Future of Insurance.